my little son said, "Yeah, Dad, I really miss you. But if that's what you want, I'll support you." And this came from a 12-year-old. So I was like, wow, okay. Our leases are not signed with your councils. They're signed at the very top, right, at the Secretary of State level.
So it would take the UK sovereign cash flow or the UK government to default on the portfolio for you guys not to get paid.
Correct. What is important, I think, for real estate investors is that you have
Josh, welcome to the podcast. I know you're over from Singapore for a couple of months in the UK, so I really appreciate you fitting me into your busy schedule.
Thanks, Matt. Thanks for having me. Hi, everyone. I'm Josh Liaw. I'm the CEO of Elite UK REIT.
And it gives me great pleasure that you join me today. So, like I said, Josh, we're kind of sat down early part of October. You're over from Singapore. We'll get on to talking a little bit about your background and story and how you view the market and what the opportunity is for Elite. But a place that I always like to start these conversations is, can you cast your mind back and just talk to me around university? Because if I'm not mistaken, you did economics, right?
Yes, I did. Actually, I have a quite interesting story of where I started. I'm Singaporean. I grew up in Singapore in the 80s when Singapore was coming from a third world country to where it is today as the first developed nation. But those was very, very tough days, but also very enlightening and inspirational part of the world, because I think we see a lot of growth, a lot of hard work, a lot of diligence in where the country was going. So you're right. I studied. I have a degree in economics from Singapore Management University, but in Singapore we do national service as well. So when I was doing my national service, I actually took a other degree in logistics from the RMIT University in Australia. So I have 2 degrees, but I don't use them really actively in my line of work. It's also quite interesting that I actually went to learn Japanese on my own when I was a teenager at 14 years old. And in university, my second year of university, I got a scholarship and I went to study in Tokyo. Again, I don't use Japanese in my daily job, although I'm rather fluent in it. So it's a very interesting story of my background. I have all these, qualifications which I don't use.
Yeah, but also in terms of the timing, as you touched on, in terms of Singapore kind of developing, moving, kind of changing into kind of a first and developed country. In terms of the active service, how old were you when you had to do that?
I think I was 18 or 19 years old.
And what did you have to do?
Well, I was actually a air defense artillery officer. We fired a French missile, actually.
And that was based in Singapore? Based in Singapore, and you had to do that for a year?
Everyone had to do 2.5 years in those days. Now it's 2 years, but back then it was 2.5 years. So 2.5 years of your prime youth days, you have to give it up to the country. You book in every Sunday night, and you book out every Friday evening for 2.5 years. So it's a big sacrifice.
And you're like trained in kind of military.
Yes, I'm trained in M16, 2 missile systems, 1 portable radar, pistols, I think.
Wow. So are you kind of a reservist by proxy then?
Yes.
Is that the whole idea?
Yes. So you're a reservist until the age of 50, I think, if you're an officer. And if you have completed 10 rounds of this service, you get called up every year. You could defer if you're overseas, if they're working overseas. But there is always a limit in terms of age where you get called up.
And so as part of that period, you also did an international logistics degree.
Yes.
In Australia?
Yes, it's actually a corresponding course.
Oh, it's a corresponding course.
Yeah.
Why did you choose that?
Well, at that point in time, I wasn't accepted by university yet. So I wanted to get a university degree, and that sort of was, what I had right in front of me. Before I went to the military, I was in the Polytechnic, and I had a diploma in logistics and operations management.
So you didn't fancy sticking in the army?
Well,
or military?
No. That's just like a rite of passage. I think not many people will stay on. It's just giving back to the country.
So you graduated having done your logistics degree, but you also got an economics degree. You entered into banking, if I'm not mistaken. How and why did you choose that?
Well, that's also another interesting story. I have actually wanted to be in public service, to work with the government, and work in the government rather. So up to the very last stage, I thought I was going to join the foreign service, but I didn't get through. Around that time, I was dating this lady who's now my wife, and I asked her, "Hey, do you want to hang out? Do you want to hang out this afternoon?" And she said, "Oh, I can't. I've got this entry exams to Citi Management Associate program." And I said, "Oh, but I got nothing to do this afternoon. I don't want to be waiting around for you. So why don't I just join for the exams?" So I did, and I think out of maybe about 1,000 candidates, they selected 6. I was one of the 6. She wasn't, so she married me.
So she told you to apply for the Citi rotation.
Yeah, well, she said she was going to do it, and I said I have nothing better to do for the morning. So I went to
So
join
you
her.
literally just turned up and you did the exams.
Yes.
So tell me then, as a kid, kind of what kind of kid were you? Particularly academic, studious, sporty?
I
mischievous?
was not sporty. I was a bit mischievous, definitely quite lazy, and always trying to find the quickest way to do things. I worked very hard actually later years to try to be ahead of my peers. And then I realized I'm not particularly very, very academic in the sense that I try very hard, but I never did very well in exams. At a point in time, I then made a decision to actually do something a bit more special, so I stand out. That I will stand out when I graduate with my peers, with my cohort. The first year when I was in secondary 1, so about 13 years old, I picked up French. I gave up after 1 year because, not because I was bad at French, but because I felt that in Asia, back in the 90s, French was not going to help me a lot, or was not going to give me the opportunities that as a language, foreign language could give me. And at the point in time, I took a rational decision. At the time, Singapore's largest economic trading partner was United States, and Malaysia, and China, and then it was Japan. So I picked up Japanese at 14 years old on my own. And back then, we don't have all these online resources that we have. I went to the library, picked up a book, learned the script. There are 3 scripts in Japanese. So I picked up one script over one weekend, another script over the other weekend. And that's how I got started with library books.
But to get into Citi and to kind of pick up Japanese like that, you must have been gifted academically of sorts over others.
So I realized much later on that I was even though I was hardworking, I wasn't exam smart, and that's what you need to be to ace the system. So I wasn't playing to that game. I learned later on how to be really good at exams, and I think I did very well in university. I have another theory though, that with regards to languages, it's a bit like languages. If you look at the grammar of many languages, it's a pattern, right? And the mathematics it's the study of patterns, really. So it is quite similar in that sense.
So if you could learn the pattern, it gives you the ability or the playbook to unlock the rest of the game.
Yeah.
So you landed at Citi, and can you just talk to me about the kind of the rotations and the coverage and the role that you did?
Yeah, so I think as a management associate in the early 1 year of my journey within the bank, I had to rotate within different departments. I went to finance. I think I almost quit after a week. It was really tough and quiet. You could hear a pin drop, basically. So not quite what I thought I signed up myself to do. And it gets particularly hard when I catch up with my cohort mate, the other 5 people who was in that, and we were all like in our 20s, right? When you catch up at drinks and everybody's telling everybody, sharing with everybody else, oh, how great my day was. I did this. I met the client, and I was like, yeah, I just did Excel.
So it's literally just Excel.
Yes, but that actually was a very, very good foundation for banking. because if you're an analyst, you're doing pitch books, you're doing running models. That's really what you need to be good at.
And what sector were you focused on at that particular stage?
So after the rotations, I went into the real estate department. I think many of your listeners, if they've been to Singapore or have seen pictures of Singapore before, there's this very grand building called Marina Bay Sands with a rooftop swimming pool. It looks like a little bit of a boat perched on 3 buildings. So that was one of my big, debt financing deal I did when I was in the banking, and I did that as at a very early age, in banking.
So you were responsible for kind of underwriting it.
Yeah, I was helping out with the credit paper, doing the negotiations with the lawyers. So that was
your first kind of route or exposure to real estate.
Yeah. But I think with regards to real estate financing back in those days, I felt very privileged to be able to be part of many of these transactions. Why? It's because you can tell your girlfriend, you could tell your friends, you can tell your family, hey, I was part of that building that you see over there. Whereas I got friends in aviation financing and ship financing. The ship sails away, the airplane flies away, you never get to see it again.
Yeah, quite. Whereas at least you can kind of point to something kind of tangible, physical, living, breathing. Correct. I think that's why a lot of people get into real estate or like real estate. So how did your kind of role evolve, and what other kind of projects did you work on?
Yeah, so I think before that, I think after we did that particular financing, this is in 2008, we were rubbing our hands together. I was at least, and said, oh, it's gonna be big bonus time, right? Because we've closed a big deal. But then Lehman crisis happened, and the whole world went pear-shaped. And I think Citi, for example, I recall share price went from $50 to $1. And there was this really keen sense of crisis. So I think that was where I think things started to get a bit scary. Again, you've just started out your career, and then what's going on in this war, right? And then I think what happened was that I joined the Southeast Asia Pacific team with the CEO, and we're part of a small team to really manage the crisis at the time. Later on, I think he left the bank, and I went to join Standard Chartered Bank. So at Standard Chartered Bank, I really did step up to become a front-facing banker. That's I've cast my early beginnings as a junior banker behind, and that's where it really gets real. In those days, I recalled that some clients didn't want to speak with me simply because you don't look enough. You don't have enough wrinkles. You don't look old enough. You haven't got enough white hair. They'll tell me things like, I don't think you can get me that deal. I don't think you can get me that credit approval. I want to speak to your boss, not you. So it's quite common you get that in Asia and Singapore. I think that really spurred me on to try to be better, to try to get to know the clients better. One thing that has taught me over, I guess, the few years after that is that all chief executive officers, all CFOs, or group treasurers, important people, they're all people at the end of the day. They all have problems like you and me, right? They all have families. They all have things that they worry about. So once you sort of, if you take away the rank and you treat them as a person, if you're sincere, they will respond and reciprocate.
It's great advice, and I think you're absolutely right. I think even over here in the UK, there's cultural nuances, and people kind of look at individuals maybe earlier in their journey and don't think that they're qualified or able to maybe assist. But hopefully that is changing. But I love the meritocratic aspect, and if you're good enough, you can find a way. So in terms of some of the deals and the projects that you worked on, can you just share some of the projects that you did?
So I think my career has really come a bit full circle. So I started with covering some real estate investment trusts listed in Singapore, and this was really the early days of the real estate sector in Singapore. The real estate investment trust sector rather, just celebrated its 20th anniversary has been around for 20 years. Started in 2002 with the first listing. And I think the clients that I had back then they are still around. They are my friends and my peers, and we constantly catch up. It's just a very small community. We do catch up, talk about our past stories, it's a very close knit community actually. So I covered real estate investment trust, some developers in Singapore, but also because Singapore is a bit of a hub for the region for Southeast Asia, you invariably need to cover another sort of a market in the region. I was tasked with at first covering Malaysia and then Thailand, and I also set up the lending business for real estate in Philippines for Standard Chartered back in those days. Later on, we did rather well with a couple of private equity real estate names. For example, I was quite close with BlackRock and LaSalle, some of these names, which I think they're also in this part of the world. Yep. So then I was asked to lead the private equity real estate business for Standard Chartered in Southeast Asia.
So for Standard Chartered, initially, what it was kind of a debt lending, senior, stretch, mezz,
everything,
bridging.
No, but it's more than that. We back in those days we did equity capital markets as well as debt capital markets. You see, the REIT business is one where the real estate investment trust needs to distribute 90% of its cash flows, right? So at least 90%. So
that is a function of being a REIT, right? That's the legislation or the governance around it to get the kind of the tax exempt status or whatever it has to. You have to distribute.
That's right.
90% of your income.
Yes.
As dividends.
Yes. And it only makes sense for the REIT to exist as a platform if it can grow, right? And if it's trying to grow, be it through organic development of its assets or buying new assets that's accretive, it needs to raise capital. It's capital hungry in nature. That's the beast, right? You gotta keep feeding it. So it's actually for the banks very lucrative if the REIT is looking to buy an asset. It would need to raise equity. It would need to raise debt, and the debt could be in the form of bonds or loans. So it's really quite a sort of collective package that you could actually deliver as a bank if you have all these elements available to you.
So if you've got the relationships, you can then assist them with providing the structure or the products to enable them to acquire, develop, and drive kind of income and then distributions for owners.
That's right.
So that was the kind of the initial part of your role at Standard Chartered. And I guess your role became more managing those relationships, owning those relationships and developing the relationships with the BlackRock and LaSalle's of this world.
Yes.
You then touched on, you moved into kind of the real estate private equity aspect. Was that kind of carved out a separate part of the bank, and that was where you're doing what principal investment rather than
no. We were helping these sort of set of clients, but in their banking needs. So mostly it'll be lending, but also some advisory work from time to time.
And you said you grew up to kind of head up the kind of the Asia coverage.
Southeast Asia coverage.
The Southeast Asia coverage. Yep. And what specifically were you doing within the kind of the private equity?
Lending.
Still lending.
A lot of lending. Non-recourse lending. Which
not just to REITs though.
Not just REITs.
Fine. So it was broader than just kind of REIT coverage.
Yep. And then I think one of my clients was Lendlease, and they've convinced me that if I was looking to leave banking, they will be quite a good shop. So then that's where I went next.
And at this stage, you've been in the banking world for
9 years.
9 years or so.
Yeah.
And was it that kind of classic inflection point where you're thinking, do I double down? Do I stay on the sell side, or do I kind of move to the buy side?
Well, it was not entirely a rational decision from a financial perspective, because if I had stayed in the bank, I think you'd be paid handsomely, right? And you'd be MD by now, although that journey to get to MD these days may not be that easy, or you may not stay at the top for quite some time. But the real reason why I think one key reason why I left banking was also because I have young children at that point growing up. I need to spend a bit more time with them, and I think that was, to me, a very wise decision.
So Lendlease kind of tapped you on the shoulder
Mm-hmm.
and said, why don't you come over to the buy side? What was the role and what did you go in to do?
So my role was head of treasury Asia for Lendlease, and Lendlease, I think in Asia it's really big in Singapore and Malaysia. The exact two markets I was covering in Standard Chartered and I'm very familiar with, but also in Japan. So I spoke Japanese, never got to use it. So maybe I could try to use it, but that never really wasn't really a big business during my time as a treasurer in China. So I speak Chinese as well. So it feels like it was a job made for me in some ways. I speak all four languages of the four markets that I covered. So I went and joined them. And I think I also did subscribe to the ethos of the group treasurer then to do a lot more and to, with the banks that and to have deeper relationship with the banks. I felt I could do that coming from the banks, coming from the sell side. What are some of these thinking process that that I know that the banks think in this manner that can bring over to this side of the table.
So it was just a case of transferring your role effectively from sell side to buy side, and then being able to kind of utilize and leverage the understanding and experience you had having worked on the sell side to kind of maybe mitigate or help or kind of structure.
So I mean,
deals and capital
sometimes
flows
if you
better.
ask bankers, they say that the worst class clients are those that they used to be bankers because they tend to be able to read their minds. But I've also been told that you can also be a very good client in the sense that before the banker asks you for a piece of information, you really know that they need it and you give it to them. So that's you also do understand their internal processes, their own internal politics, and you try to help them as the banker navigate their stakeholders.
And I guess you know how to format it, present it, pitch it as well, which makes it more straightforward. Talk to me, how did your kind of role evolve having joined Lendlease, and what other kind of projects did you get involved with?
Yeah, so I think it's quite exciting being in Lendlease because it was in a growth stage. But at the start, I think one thing you have to grapple with is the mindset shift coming from banking into the corporate side of things. I'll give you an example. In banking, I guess you can step on everybody's toes, but if you get the deals in, you get the revenue in, you meet the budget, the boss will tell you, "Oh, done, here's a bonus," right? And in the corporate side of things, you kind of have to hold everyone's hand, kumbaya. Everybody needs to feel good, consulted.
Listen to
exactly stakeholders manage, and then you kind of need to do that to succeed in that sort of part of on that side of the table. The other thing is also in the bank, if you're given a revenue target, right, say 3 million or 10 million, and the MD does not really care how you get it done. If you can just produce 11 million, 10 million, if you hit the budget, well done, right? And you don't have to do every deal. You just need to meet your budget. In the corporate side of things, you have no deals to choose from. You have to do every deal that there is because your colleagues have brought you these deals. They need the funding. You just need to deliver on them. There is no for answer. No is not a wrong answer they can give. Although I've also learned to say yes, but which is
so it's a different mindset shift from being kind of a chief or someone who's going to go out and structure and do deals and maybe have some slightly sharper elbows to someone who's going to be a bit more collaborative, collegiate, bring people in on the journey, and actually have to kind of lend their hands and do deals that maybe they wouldn't have picked, but actually fits the wider company strategy and plans, and
right.
They need to play their part or their very small part in the wider process to get it done.
Yeah. But it was it was still really fun. We did. I think back then it was just me and I had an associate. We were running deals, $1 billion deals for the company, including development financing for projects in Singapore, construction financing or development financing in Malaysia. And bonds, secured bonds, unsecured bonds, and meeting fixed income investors, doing the roadshow. So that was all very, very helpful, very, very interesting. to be able to do it on the other side of the table. I think sometimes as I recall back when you were in a bank, you give the information or term sheet to the client, and then things will start churning, but you do not know exactly what goes behind closed doors. But the client actually do have a lot of internal stakeholders to manage. Legal, business leaders, finance, people in Australia, I mean, your head office. So everybody needs to be happy. And then so sometimes I think with certain deals, people have certain relationship with different banks. So they will tell you, oh, we should work with this bank, I should work with that bank. They scratched my back the last time. So, all these things need to gel together. And then it gets into a black box. The client, for example, drafts up the prospectus or the information memorandum, the offering circular, and it comes out looking great. But
there's a lot of process.
There's a lot of process, a lot of pain, sweat, tears.
How did your role evolve at Lendlease?
So then I think at the end of 2018, I think, I put out my hand and told the CEO, I said, look, I've been doing this for 4 years. I think I would like a different challenge. But also I felt that, and then quite sadly, that we are on this treadmill, that if I think I was 35, 36 at a point in time, I felt that, they're quite happy with me. I was doing well. But could I be a senior treasurer, MD of treasury at a much older stage, still doing the same thing? I think the answer is no, because I mean, as real as it gets is that at 46 or 56, and you're still doing the same thing with no value add. You probably want to be paid more, and if you're not doing more, you're not taking on more on your shoulders. I think you actually put yourself at the risk of being made redundant. Someone could actually hire someone more energetic, younger, to replace you. So I felt that it's not really a choice. I felt that you kind of need to put up your hand at certain points in the career. Raise up your hand and say, I want to do more, because I still can, and I want to, and I have the ambition.
You had the ambition, you didn't want to be doing the same role for the future.
Yeah.
And you just wanted to kind of protect yourself, but also find something that was going to still be stimulating, provide a new challenge.
And learning new things, right?
So you had that conversation with the chief exec. What role did you move into, and how did that?
So I think it was a very helpful conversation, and I think Lendlease is a very good company. They promote mobility, right? And they are very adult in that sense that, if sometimes I think in some companies, if you do tell your boss that I want to move on to a different role, it might be taken quite badly or quite negatively. But in other companies, such as the one that was at Lendlease, they take it upon themselves that, if we don't provide you opportunities, you leave the organization anyway. So rather than lose you to a different organization, why don't I just give you a opportunity within the firm? And that's how I managed to stay 9 years, because every turn of the way where I thought maybe it's time to go, I think something comes along. So I think I put out my hand and said, I want to do something different. They said, okay, we're nothing your seniority at this point in time, but let's keep a lookout. And they did. A few months later, they said, somebody is moving on to another country. Would you like to take on the role as the CFO for Singapore? And I think within a few months, I suddenly had 33 people reporting to me, which is, I think, very interesting as well, to be able to lead such a large team.
And before that, how many people were you managing? Or?
Maximum, I think in the bank, I probably had about 5 people.
So it's a big step change just in terms of personnel and role, remit, responsibility.
Exactly, and understanding people management and being doing that well. I think attrition, for example, was a issue. So you learn how to deal with it, such that when the first person quits on you, it gives you a bit of you get a bit like unnerved.
Your ego takes a hit.
Well, not so much. It's more like, what do I need to do? And it becomes worse because one person resigns and another person resigns and the third person resigns. The job the task that's still left within the team then gets spread amongst the remaining people, and then suddenly everybody feels like they're being put on a tightrope, right? So you kind of need to address that situation very quickly and very decisively. So that's what I've learned, and to this day, I think that has taught me a lot of things. But one of the things that I have come up from that role is really the people management bit, where I'm really unfazed if anybody quits. So be it. We have a way to deal with it. It no longer I no longer get unnerved by it.
But you want to make sure that you're putting the right environment in place to enable people to perform and get the best out of them.
That's
But
right.
if they're not bought into the vision, mission, and they're not kind of aligned to the direction of the wider company, and they don't want to be there,
Yeah,
that's
and to be honest as well, I think if you are dealing with 33 people, you have 33 personalities to deal with as well. Not everybody wants to move up. Some people are very content to just do the same thing. They want to grow old in the job, which is fine, because I'm not going to be able to provide 33 promotions every year anyway, right? But then there were some who really want to get ahead and they're really motivated, and then these are the high potentials. But not every path is meant for everyone, and everybody will choose their way. So understanding where people are, what they want in their jobs and how they want to achieve those, I think is very important.
yeah, composite of the team, dynamics, management, leadership. Did that come naturally to you, or did you have to work quite hard on? Quick one from me. If you haven't already subscribed or followed this show on the podcast or app where you listen or watch, please do. It takes 10 seconds and helps tremendously. I've got really big plans for the People, Property, Place podcast, and that one small action really, really helps grow the show and the presence and enables us to keep doing what we're doing. So if you haven't already, please follow or like on the platform you watch or listen to. Thanks so much.
I think it came naturally to me in the sense that I had no time to think about it, but to really react. If not, everything goes pear-shaped very quickly.
Was it that military training that was instilled in you that helped?
I have no idea whether it is, but I just had to rise to the occasion, I guess.
So you rose to kind of CFO, looking after Lendlease REIT across the region, or?
Yeah. So then I think in 2019, 2018, the back part of 2018, 2019, I think the company said, we have this big project. We want to do a initial public offering of a real estate investment trust of various assets listed in Singapore. And I was like, and I told the team, I think I'm quite the right person that you'll be looking for, given my background in banking and treasury, and I was a CFO. So I put out my hand and I joined the IPO team. It was very intense, 10 months with regulatory filing, internal memos, preparing for listing. So there was a lot of hard work. I think we were working every weekend for about 10 months.
To get the entity or the asset, the platform ready to be listed?
Yep. So we finally listed in October 2019.
And then was it kind of a case of kind of managing that listed REIT?
After that, yeah. So it was a new business unit for the company. So we had to develop policies. We could borrow here and there, but essentially all the policies had to be written right from scratch. So yeah.
You left Lendlease in May 2023, if I'm not mistaken.
That's right.
And you joined Elite UK REIT as CEO, Chief Executive. Can you just talk to me about why you decided to leave and look for a new opportunity, and what was that opportunity that you're going on to do?
Yeah, I mean, I think for me, I think the decision was a few folds. One is I think 9 years is quite a long time to devote to the company. Not that it's a bad company. It's just that I felt I needed new perspective, and to think things differently. And the only way I can do that is if I have a new experience. I had a few offers, and then I went to speak with my family. I asked my son, "Hey, are you okay if Dad went overseas for a few months to do a job?" My little son said, "Yeah, Dad, I really miss you, but if that's what you want, I'll support you." And this came from a 12-year-old. So I was like, "Wow, okay." This is my little baby. I didn't expect him to be that mature to say that. And so that I think gave me a lot of confidence. And it's not just my son. I have another son. You know, my family, my wife, they all have been supporting me on this journey. And I think I've mentioned to you that last year I was here 4 months straight in a very difficult time. And being away from family, I think there was also some sacrifice that we had to make as a family.
Yeah, it's no longer well, it's not no longer, but it's no individual sacrifice. It's a whole family affair and effort to enable kind of leaders to do what they do when it comes to business. Can you just give me a little bit of context around Elite UK REIT and the role that you kind of stepped into?
Yeah. So when I stepped into the CEO role at Elite UK REIT, our leverage was I think nearing 50% in those days. So in Singapore context, as a real estate investment trust, you're regulated by the central bank MAS. You have a gearing limit of 50%. After which you can't borrow anymore, and I think your share price would get some beating back as well. So we were at the edge basically. So we had to work on doing a fundraising, which I think we launched just before Christmas, and we closed at the start of this year. And it was a very busy time. We had to do what we had to do. But I think that to me was something that I think was very well respected by many of our stakeholders, investors, and market watchers. They saw that we did what we had to do. It wasn't. I guess nobody wants a dilutive fundraising, but we had to do it. And we used that to then sort of get our banks to support us in the refinancing. Once we had our gearing reset, we paid our debts. We recently refinanced in July all of our debt with no refinancing until 2027. So I think that was a very good outcome. But there was a lot of sacrifice, a lot of hard work of the team, not just me, to get to where we are today.
To kind of refinance that debt to make sure you're liquid and able to kind of transact and move the business forward. For someone who hasn't heard of Elite UK REIT, can you just give me a little bit of context in terms of the portfolio, what's in the portfolio, and how it's structured as well?
Yeah.
Because it's a UK REIT, but it's Singaporean.
Yeah.
Domiciled, and I think there's a Jersey angle to it as well.
That's right. So it's a very curious creature, really. So we have so Elite UK REIT, as the name suggests, has UK assets, 150 assets dotted all around the UK, and these assets are primarily used as job centres, being leased to the Department of Works and Pension, but also other government departments such as the Ministry of Defence, etc. And they use these for job centres and government workspaces, but it's entirely in the UK. We are listed in pound sterling. Our debt is in pound sterling, cash flows in pound sterling, dividends in pound sterling, but we are listed in Singapore. So that is, I think, quite peculiar situation. And I think if you're an investor in this market and you're keen to gain access to, government cash flows, I think there are a few REITs here that has that sort of profile. I won't name them, but if you wanted specifically to get into cash flows of job centers, given that it's a resilient class that's counter-cyclical, it's strange, but you have to go through Singapore, not through a LSE listed entity to get the sort of exposure.
And so it provides retail investors or kind of sophisticated or institutional investors access,
But through Singapore.
but through Singapore, or
Yeah.
if they're in Singapore, access to the UK,
Yeah.
A government-backed, government underwritten UK portfolio of cash flowing real estate.
Yeah, you could say that. And I think we often get asked this question, why would a UK REIT be listed in Singapore? And what's the case for that, right? The thing is, if you or any of the listeners have been to Singapore, it's a very small country. We have run out of real estate to securitize, basically. And out of the 43 REITs that's listed in Singapore, only 3 REITs have assets that are fully in Singapore. The other 40 REITs, some of them would have assets, some in Singapore and some elsewhere. But then there will be all these number of REITs listed in Singapore that have exposure to various countries. For example, there are 4 REITs listed in Singapore with exposure to the United States. Maybe 2 with exposure to Indonesia, almost entirely. And then you have like 4 that's entirely, exposure to China, and 2 with exposure to Europe, and 1 that's 100% UK.
And can you just talk to me about the portfolio? What's the value of the portfolio? And you said it's 150 properties. Can you, and they're job centres predominantly. Can you just give me a little bit of additional colour in terms of the assets and the location and the type of property?
So I think the DWP, with regards to job centres, have this policy where the job centres needs to be within 20 minutes of travel, bus or train travel to the job centres. And as such, they need to be all around the UK. For us, we own 136 assets that's leased to the DWP out of the 150 assets that we own. The total valuation is 415 million. And we just did a very recent valuation in June this year. So that's something that's fairly recent. And compared to the last valuation, which we did at year end last year, it actually was slightly up at 0.6% up, which I think it's a very small win, small increase, but at least it hasn't dropped, which is what we've saw in the last couple of years. So I think it felt like finally things are looking a bit more stabilized. With that, with the refinancing, it felt that things are stabilizing for us.
So out of the 150 assets, 130 odd are job centres. And the characteristics of that is there's got to be one in every kind of town regionally within a 20-minute bus or train or car ride.
That's right.
And so the government effectively is the occupier, is underwriting the rent. And am I right in saying that they pay you 3 months in advance?
That's right. They're good paymasters, pays on time and 3 months in advance. So what we do is usually to use these rental income that we receive in advance, then we use that to bring down our temporary levels of debt. So that's probably the most efficient way of using your capital. You could take the cash and put it in fixed D, which probably won't give you a lot. It's probably much better to take it and reduce your debt, which you have to pay a lot more in terms of interest. Your classic negative carry situation. And when we sort of need the money for working capital, or we need the money for dividend payments, then we can draw back on the debt to pay those.
So it makes sense just in terms of some clever structuring there, and the fact that they pay 3 months in advance.
That's right.
Isn't there quite a bit of risk having a single tenant profile against 138 or 150 assets or whatever it is?
Well, it is in some ways if you take the view that the government is risky, but we take a different view. Actually, we think that the best credit you can get is actually the government credit. And our leases are not signed with your councils; they're signed at the very top, right, at the Secretary of State level. So this is as sovereign as you could get. These are sovereign cash flows, in an indirect manner.
So it would take the UK sovereign cash flow or the UK government to default on the portfolio for you guys not to get paid.
Correct. But then I think when that happens, I think you have much larger issues.
Yeah, I think you're probably not wrong there. So in terms of the assets itself, though, yes, it's government backed, but in terms of the profile, are you kind of looking at these assets as an ability to kind of re-gear at lease end, kind of drive the rental income that way? Or is there kind of a development or a backup business plan?
I would say both, actually. I think one reason why our investors like the Elite UK's REITs portfolio is, number one, is government credit, right? It's government cash flows, can't get better than that. But also it's job centers, and job centers are there's something that's very much needed, counter-cyclical, in fact. When the economy is not doing so great, people do use the job centers a bit more. So it's even more cherished in hard times. But also because of the way your social security, social welfare system is set up, you kind of need the job centers. It's resilient. It needs to be everywhere. And then from a location perspective as well, yes, these are dotted around the UK, but they tend to be in the main street or the street behind the main street, given that they need to be close to bus and train transportation nodes or close to amenities. And we sort of in April this year, announced to the market that we will have a sort of a broader sort of thinking around our investment strategy, and we are open to accept other sectors, other assets, in particular living sector. So we're talking about student accommodation or built-to-rent residential. Especially for built-to-rent residential, I think the opportunity there is immense for the UK. And why do we sort of pick up living sector of all the different sort of sectors? Right? I could have said logistics. I could have said retail. I could have said hotels. But I think living sector makes a lot of sense given its locations of these job centers or some of these assets where they are. They're secondary to London, but they are actually primary in the locations that they are at. So that makes a lot of sense. And of course, I think the living sector also has, quite a fair bit of tailwind in terms of demand and supply.
So in terms of the backup business plan or base case, you can redevelop or reposition subject to planning and turn some of these assets into kind of living assets and try and drive value that way.
Yes, but I think the base case is always for us to renew the majority of our leases with the DWP. There has got to be.
Am I right in saying that DWP have got a lease event on all 136 properties of yours on one day?
Yes, that's right, and I think it's one slide that we put in our results slide every quarter. That's also a bit of a reminder, and perhaps I think that's also one risk factor that investors would have in their heads, when they invest in the REIT, and that's probably limiting where the share price needs to be. But it is a reality. We inherited these leases back in 2018 when we first bought the portfolio. Of course, we went IPO in 2020. So it's just really dealing with the back end of that situation. But I think it's also, I think you need to understand as well the nature of the leases, the nature of the properties, how they're being used. If they're being used as job centers, in regional locations, sometimes I think these assets are rather sticky in that sense. Job centers are also counter-cyclical in terms of their use when the economy is not doing so well. The job centers are also very well utilized. So I think it's also an opportunity. I think when we really renew or re-gear these leases in different buckets in future, I think that's also what the tenant will want to see that happen for ourselves and so for themselves, so that nobody gets really stressed at Christmas or thinking about what cliff edge do we have to deal with next year.
Yeah, I can imagine, because I guess until you get those leases squared away, it must be quite challenging. Yeah. But the government must be looking at alternative uses, or how they can kind of rationalise or consolidate some of the portfolio. So that might be a factor to kind of think about in terms of some of these backup business plans. A lot of these assets would be quite old, run down, and I guess from an ESG perspective, lacking from an E. How are you going to kind of manage and and mitigate that?
So I think last year when we did a regearing exercise in which we effectively removed all lease breaks, and we also banked in a inflationary uplift in terms of a rental. What we then offered the tenant here was not a rent free, but was a investment into the sustainability of the assets to increase the EPC rating. And that was taken very favorably by both sides, ourselves as well, and our investors as well as them and their stakeholders, the higher ups as well. These assets are triple net leases. So when they invest on the sustainability features of the properties, it's almost an immediate win in terms of savings to their bottom line, the cost of occupation, right? And we've seen that come through as well. So we've contributed, some money to that objective, and so have they, to sort of green these assets, because it's triple net as well. I can't just walk up on a Sunday and say I want to change your light bulbs without the permission. I can't just barge in and do that. So we kind of need the cooperation as well. So it's actually a win-win for themselves and ourselves. When it comes to the lease renewals, I think we will see a sequel of this somewhat, which I think will be well received both ways as well. And if they are able to extend some of these leases for much longer, I think there will be definitely a case for us, to put up some good money to refurbish some of these assets into much greener EPC rated properties as well.
Yeah, I guess which you'll need to, just in terms of kind of getting debt or satisfying your kind of loan covenants, as it were. But I guess looking at it from an ESG perspective, it's probably quite a strong kind of like social
That's
kind
right.
of impactful portfolio, just given the kind of the occupier and tenant and customer that they serve as well.
That's right. I think the job centers and the good work that DWV does goes a long way in alleviating poverty around the country and getting assistance to the parts of the country where it's most needed to actually reinvigorate economic activity in certain deprived areas as well. So it's a very important mission that they have.
Can you just talk to me about kind of maybe some of the other plans outside of residential kind of strategies? Because there's a potential data center play, if I'm not mistaken, in one of your assets ongoing as well.
Yeah. Well, actually, just last week from this podcast, we put out a press release that we've submitted for planning one of our site in Blackpool. So this site it's fairly large. We have the DWP operating in two buildings in one third of the space effectively, and the other 2/3 are a little bit of woodlands as well as overflow car parking. So that's the sort of space that it's being earmarked as a potential data center. And I think Blackpool, I think it's quite well set up in terms of its location. There's a new data cable that comes from the United States that has landed onto the Blackpool beach just a couple of years ago. And this is a brand new data cable, so it's low latency still, not quite utilized. But also, I think further up off the coast of Blackpool, you actually have wind farms offshore wind farms being developed by BP and EnBW, which is a German utility provider. That's really being constructed and with a delivery, I think, between 2030. So then all of a sudden we see, a potential data center site with good access to the cable and good access to wind power. So I think that's a very interesting solution potentially. But I think to balance it off, of course, it's actually a new sort of area as well. And I think a lot of the data centers that we see in the UK tend to be concentrated around the Heathrow Hounslow area. But that area has run out of power, and you need to move further up north. And I think Blackpool is probably going to be a key beneficiary of that.
So right location by luck or by judgment, just some wider infrastructure coming into and wider investment coming in. You've hopefully got an interesting opportunity there to turn one of the to turn an asset into an unbelievably valuable property. As someone who spends a couple of months of the year over here in the UK, but the majority of the time based in Singapore, but looking at the UK as a market, what's your take on the opportunity set at the moment?
Well, I think that the international press tends to be a bit overly negative on the UK real estate and UK as an economy or as a market, and many of the readers, or people overseas or in the UK especially are self-critical. But we tend to forget that the UK has many global champions, many large companies in Fortune 500 that's represented everywhere. I can't say you have that number of companies in Singapore that has the same level of clout, right? And I think what is important, I think, for real estate investors is that you have a jurisdiction where your rule of law is strong, your respect for property laws and rights is upheld. And I think that's really, you don't see many of those markets other than the UK. And many of our investors, that's on our unit holders, registers, high net worth individuals as well as retail investors. One reason why they invest in Elite UK REIT is because they're very familiar with the UK setup. Sure, things are not that great with Brexit and all that, and I guess just the general economic stress that's currently felt around the world with high interest rates. But the fact is that if you want to put your money somewhere safe, and you want to sort of put your money somewhere safe where you feel that your property rights will be respected and upheld, I think the UK is actually a very strong market for that. And then if you sort of once you sort of set that as a sort of basic understanding, then I think you peel away the onion, the layers of onion, where you then ask yourself which sectors would you look at, which is the most promising. I think right now that I think the phrase beds and sheds is I think quite used. And I tend to agree, especially on the bed side. Sheds, I think we're not in that position to comment. But beds for BTR, I think, is going to be huge. The other sector that we're quite keen on is PBSA. However, I think with PBSA, we got to be quite careful. There are some cities which are oversupplied, some markets which are, I think, where the universities may be quite challenged financially. And I think with the current sort of political climate, where I think visas are coming down, student numbers are coming down, foreign student numbers are coming down. I think that's something that you kind of need to be watchful for. But I think from our perspective as Elite UK REIT, we haven't got some of these legacies to deal with, so we're coming in fresh. So I think for us, if we do sort of move into that sector, I think we want to do it with the right projects, with the right deals being done.
Be selective. So as we kind of look forward, what is in store for the UK Elite REIT team over here in the UK and also the team over in Singapore?
I think, when we get closer to the lease renewals that we have in 2028, we expect that we will renew a majority of our assets, but we do expect that we will have some opportunities coming from some of these assets as well. So what I do, think we will have to do is to employ more people, to invest in more locations. We're talking about setting up perhaps another office location closer to some of our regional assets, where we have asset development managers being hands and feet on the ground to take some of these developments a bit further.
So as we draw to a close, Josh, the question I ask everyone on the podcast is, if I gave you £500 million worth of capital, who are the people, what property and which place would you look to allocate that capital?
Well, I think the questions, I actually have three answers for you, depending on your time horizon. I think if you're short term looking at low risk credit, high returns, actually I think it'll be Elite UK REIT. In the and short term meaning 12 months, right? This is what fund managers look at, 12 months, target price, all that buzzwords. If you're looking at midterm, I think BTR is really an immense market. Right now, I don't see an end to that. I see saturation as being very, very far down the line, and this is a real need. It's also a very defensive type of non-discretionary type of income. So I do think that there's a lot of promise, a lot of potential in that space. If I need to look post one or two multi-generation preservation of wealth, I think that climate change is real, and I think that demographic is changing, meaning to say people are getting older, people are having fewer children, and as a result, I think UK is probably one of the countries in the world that is very open to immigration still, compared to other countries that are perhaps almost singular in their racial makeup and all that. So the UK would perhaps still be one of the countries that will receive more immigrants. So you then talk about urbanization. You talk about resources being very much rationalized, right? And I think that if you're looking through that sort of lenses, then you may want to even think about investing in agricultural land. And move further up north. I mean, you hear stories of fishermen in Japan having to fish further up north, where the water's colder for fish that were further found typically further south. You hear of French vineyard owners buying land in southern UK. In
Sussex, yeah. It's a big play.
Yes, exactly, because just waiting for climate change to happen, or rather, it's a hedge, right? So again, I mean, if I have 500 million pounds, I think if I have that level of wealth or that wealth to deal with, it's probably not. I think that the mandate is not really to grow that massively, but to really preserve wealth at that level, and also depending on what sort of investment horizon you have. If you have a long-term view, that's that, and mid-term view is BTR, short-term view, invest. You could possibly invest in Elite UK REIT.
Well, Josh, you've had a fascinating background, military service, international degrees, learning Japanese, through to kind of banking, private equity, treasury, REITs, as well as kind of running the Elite UK REIT. Like I said, really interesting background, story, portfolio, and kind of rationale and reasoning for kind of investing in what is effectively an income strip with a land bank, with some strong kind of backup business plans as well, should the government not renew some of the leases. So thank you for joining me today, and really appreciate you telling me a little bit more about your story, background, and plans for the future.
Thanks very much. I had a lot of fun.
Thanks for listening to this week's episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show, or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information, or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you next time.